Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, October 29th, and we'll see how things look for Thursday, October 30th. The S&P 500 finished virtually unchanged, down less than a point, closing near its daily pivot at 68.91. The Dow was down 0.3%, while the NASDAQ and NASDAQ 100 both posted gains and closed at new all-time highs. Mid-caps and small caps lagged, with the Russell down 0.85% and the S&P 600 declining 1.3%. Trading volume for the S&P was above average, signaling active participation. The Federal Reserve came out at 2 p.m. Eastern with its rate policy decision. As widely expected, there was a 25 basis point cut, bringing the Fed funds target rate to 3.25% to 4%. Chair Jerome Powell, in his press conference, emphasized that a December cut is not a foregone conclusion, noting differing views among committee members. The markets had priced in a near 90% probability of another rate cut in December, and those odds have now plunged post the press conference. Market reaction was sharp but contained. The S&P 500 sold off after 2 p.m. Eastern, briefly dipping below the first support level at 68.71, but found support near the second support level at 68.50, before recovering to close flat. Intraday, the index opened above 6,900, drifted lower going into the Fed announcement. Looking at sector leadership, tech and semis led with gains of 1.5% to 3%. Nvidia rose about 3%, and the SMH semiconductor ETF gained 1.5%, both hitting new all-time highs. Mega-cap growth names were mixed but supportive. Nvidia and Alphabet advanced, while Microsoft and Meta traded flat ahead of their earnings being reported. In contrast, staples and real estate were lower amid doubts over future rate cuts. The financials fell 1.7%, continuing their underperformance since last spring. After the close, Microsoft, Meta, and Alphabet reported earnings with mixed initial reactions. Amazon and Apple will report later in the week. Strong mega-cap results could fuel upside momentum. For the S&P, the technicals remain bullish across all time frames, since the S&P is above its 20, 50, and 200-day moving averages. Momentum is positive but could be waning. The Stochk RSI, CCI charts, and stochastics are showing positive momentum but did decline on Wednesday. Breadth, however, is weakening. The advanced decline line is declining, new lows are expanding, and fewer than 50% of the S&P 500 stocks are above their 20, 50, and 100-day moving averages. The bullish percent index has turned negative. A mass index reversal signal has been triggered. The Hindenburg omen remains unconfirmed but is valid through November 7th. The VIX ticks slightly higher but remains below 20. The VVIX, or volatility of the VIX, is rising. Looking at intermarket signals, the 10-year Treasury yield rose to 4.06%, back above the 4% level after the rate cut announcement. The U.S. dollar index hovers in the upper 90s and is currently not trending, but a move higher above 100 could be a potential headwind for stocks. Margin debt continues to rise along with the S&P, acting as speculative fuel. On the housing front, the weekly mortgage applications jumped 7.1%, while pending home sales came in flat. Looking ahead to Thursday, October 30th. There could be a higher open on Thursday, which could gap above 6,900. Seasonality does favor October 30th, historically going back to 2002, and post-election years often see strength as we head into the end of October and into November. However, overbought readings invite profit-taking. No major government reports are likely to be released due to the government shutdown. Some key levels to watch: a sustained break above 6,900 could favor the bulls. A failure to hold that level opens risk to the downside. Downside risks include internal weakness that continues to build, such as deteriorating breadth, sector rotation into value, and expanding new lows. In conclusion, the bias remains cautiously bullish. Trends and momentum still favor the bulls, but internal cracks are forming. It's best to respect risk, watch for signs of reversals, and let price be your ultimate guide. Thank you very much, and I will talk to you in the next podcast.